right?
How do you see behavior change between what I think many would consider the great investors from everyone else? Is there a change, or is it they've basically done the prep work to prevent themselves from making mistakes during those weak moments?
So, well, Sir John Templeton was famous for when stocks were doing very poorly. He would make a list of his favorite stocks and put buy orders in at prices way below where they were. And his reasoning was if the stocks ever got to that level, he would not have the guts to put the order in. He just couldn't do it. So there was a guy who understood his own human nature.
I love that.
What we do is we are entirely rules-based. I never override. I mean, people would say to me, well, is it the formulas? Is it? No, it's not the formulas. If you've got the best idea in the world, you can scream it from the rooftops and people either won't believe you, won't, hear you, and certainly even if they attempt to do it, won't do it right.
Yep.
And so we're not worried about that. What we worry about is, look, we're constantly improving our algorithms that select models and portfolios, and I've got a great research team. That's what we spend all of our time on. But the thing that I think I am proudest of is the fact that in my 30-plus year career history as an investor, I have never emotionally given in.
By overwriting a model.
By overwriting a model.
Yep.
And we had, and that's hard.
Yep. And just to clarify, so people who are on the same page as us, what you're talking about there is you have a model that is just, based on data, right? And formulas that you've created that tell you when to buy, when to sell, when to hold, right? Basically,
precisely.
They give you directions.
They give us directions,
and you can either listen or not.
Yeah.
Right.
We used to have a contest back at O'Shaughnessy Capital, where we would put the list of 50 names that were being selected by our small cap growth strategy. And we would have everyone guess which were going to be the 10 big performers and which were going to be the 10 worst performers. Well, you can see this coming a mile away. Everyone that they thought were going to be the 10 worst ended up being, for the most part, the 10 best, and the 10 best ended up being the 10 worst. And so I just, I basically made my mind up after a trade that I actually wrote about when I sold a huge position of puts right literally on the Friday before the Monday stock market crash. And I did that, which I'll send you a link to. I did that because I was watching TV and I was listening to the radio, and everyone was like, oh, this is so overdone. We're going to have the biggest bounce back rally ever. And I let my emotions determine what I was doing. And I was sold all the puts, and then Monday happened. And so I thought I used to keep a trader.
You had a bad Monday, but for other reasons.
Yes, for very other reasons. But I also recommend people keep journals so that you remember what you actually were thinking in real time. Because again, the brain will play beautiful tricks on you. It will make you think that you were not thinking that way at all, and then you go back and there it is in your own handwriting staring at you in the face, and you go, oh God, I was thinking that.